Right, welcome back. We've got a Q1 earnings video. We're going to go over a ton of companies here. We're going to start off with the big tech names, and you'll look at a lot of names, but we'll go over mainly some of the more household names. And we're going to look at a lot of charts like this that show their income statement. And the thing I want everyone to realize is how profitable these big tech companies are compared to everybody else. And that's why they're called the Magnificent Seven. So first off, Google here, Q1, $90 billion in revenue. That's up 12% year over year. $67 billion is ad revenue. That's up 8% year over year. And their search is up 10% year over year. So the big fear with Google is the potential cannibalization of their search business due to ChatGPT and other services like that. But they're still holding up steady here. And the cloud is their biggest grower, up 28% year over year, bringing in $12 billion in revenue for this past quarter. And you can see here their gross profit is $54 billion for a net profit of $34.5 billion. So very profitable company. And you can see here cloud is continuing to grow. Operating income from the cloud is continuing to grow nice and steady here. And their revenue growth year over year is staying over 25%, which is great because as it gets larger, it's harder to grow at those same percentages like it was doing back at 50% back in the day here. This is a TV time market share between YouTube and Netflix. YouTube steady chart up and to the right. Netflix a little bit more choppy and slowing down a little bit in the last handful of quarters here. And then here we look at YouTube ads versus Netflix revenue. So YouTube ads is pretty close to competing with just Netflix in revenue. So again, YouTube is a huge business that's inside of the Google company. But both of these companies are doing very, very well, YouTube and Netflix. We'll look at Netflix in a little bit. Microsoft, one of the standouts from this quarter, $70 billion in revenue, up 13% year over year. Azure, the big grower here at 22%, and you can see their net profit of $26 billion. Again, this is phenomenal. You won't see a lot of green when we start looking at a bunch of other companies, but for these big tech companies, a lot of profit, a lot of cash flow for them to do whatever they want, like go buy NVIDIA chips and invest in AI or any other business that they want. So Microsoft doing well here. Let's see here, revenue by segment. You can see for Microsoft, they've got 360 here, Azure in yellow, and then some Windows and Xbox down here. But the big news here is the growth in their cloud, up 35% from 31% last quarter. So that's great. And here we're looking at Netflix. So Netflix, $10.5 billion in revenue. So much, much smaller revenue compared to these other guys. Netflix 10 billion, Microsoft 70 billion, and what was Google? 60 billion? 90 billion. So Google is the winner here in quarterly revenue at $90 billion in just 3 months. So shows you the size. And Netflix here with 3 billion in profit, and their margin, operating margin, gross margin is on a nice upward trajectory. That's good for them. And then here you can see the streaming for the US percent of US TV time. You've got YouTube, Netflix, Prime, Hulu, Disney. So you can see YouTube and Netflix make up the majority of that. And then other is the other big chunk there. Spotify I thought had a great quarter, 4 billion euros in revenue. And that's all from Spotify Premium, just a little bit in Spotify revenue, but their Spotify Premium is up 16% year over year. And this was the big, this is the big chart for Spotify. Monthly active users, rest of world, LATAM, North America, Europe. Just very nice looking chart here for Spotify. And their gross margin and monthly active users looking strong as well. Here's Meta, $42 billion in revenue. That's up 16% year over year. Most of that is in advertising for their big four apps. And you can see their gross profit for Meta is around 17 billion. So again, a lot of green here, a lot of profit. Operating profit here, you can see down in the red is their Reality Labs, the VR. So they're continuing to spend quite a bit in their spend. This box here is when they went through the year of efficiency. But you can see they're still spending a lot on Reality Labs, but I would assume that they got a little bit more efficient in other areas to get this growth to ramp up even higher. So pretty good quarter for Meta. And again, this is the daily active users. It's crazy. This is in billions, 3.5 billion daily active users of these 4 apps for Meta. A lot of people using their products. So down the road, there'll be a lot of ways for them to continue to monetize the eyeballs that they have for their products. Family average revenue per person is about $12 currently this quarter. It's an interesting stat. And so here we go. Snapchat. So Snapchat revenue about 1.3 billion, up 14% year over year, and they are not profitable. They are at a loss, operating loss of $194 million. So a lot of that's R&D. I've never understood Snapchat, how they just don't want to turn a profit. They just spend all their money, and they issue a lot of stock. So this is why, for me, I'm not a huge fan of this stock, because they just don't have the incentive right now to become profitable. I'm waiting for it. They've been around for a long time. They have a decent amount of revenue, but they just spend a ton of money, and I can't quite understand why they spend so much money, what they're spending that money on. Here's Tesla. Again, look at this little sliver of green, tiny little sliver of green. And they have a huge cost of revenue for all their products. But their revenue was up 9% year over year, 21% for auto sales year over year. And gross margin here, energy is the one standout. Everything else is going in the wrong direction. And Tesla versus BYD, we've gone over this in another video. BYD surpassing Tesla here the last couple of quarters. Now Grab is a Uber and DoorDash competitor for the Asia markets, and their revenue is $773 million. That's up 20% year over year. They are not profitable as well, $21 million operating loss, but their monthly transactions are on a nice trajectory here. So these companies like Uber and Grab and Lyft, their idea is to not be profitable and just get as much market share, get these users, monthly active users and transactions up and to the right, and then eventually they will monetize. That was the playbook for Uber, and now Uber is profitable, but for a long time there, they were burning cash, not profitable, to just get as big of a user base as they can. So I understand that, and maybe that's Snapchat's playbook, but eventually you got to turn a profit. So again, on demand, gross merchandise value, nice chart here. Taiwan Semi, now this is a phenomenal company. So they make all the high-end computer chips, basically all the semis that people really want. And you can see the different types of business they have here, but 25.5 billion in revenue, that's up 35% year over year. And they have a nice net profit of $11 billion. So this is a very efficient, well-oiled machine here, and they have a lot of cost. Their factories, it's not easy to build some of those fabs. There's a lot of technicals that go into that, and they're just operating at such a high clip here. ASML, they make the machines that make the chips, and you can see here 7.5 billion in pounds net sales for a net profit of 2.3 billion. So that's good. ASML net booking by quarter all over the place here. That's why the stock has kind of had big swings up, big swings down. This is a very cyclical business. You don't buy these machines on a reoccurring basis like you do some of the other products that Microsoft has, like Microsoft Office. People are buying that on a reoccurring basis. You only buy machines when you're expanding your CapEx. Qualcomm here, they make a lot of chips for cell phones, and $11 billion in revenue. That's up 17% year over year for a net profit of 2.8 billion. Not bad here. And we'll skip over some of these. Intel. So here's they're a competitor to Taiwan Semi and also AMD. You can see here their foundry business. This is the competitor to Taiwan Semi, making the chips. Up 7% year over year, about $5 billion in revenue, but they are just losing a ton of money. So operating loss of $0.3 billion. You can see they have a lot of cost of sales, eliminations, a lot of just a lot of red on this, no green. So some companies operate better than others. Texas Instruments, you can see a nice sliver of green here. Let's keep going. Lam Research, another, they make more machines for the chips. $4.5 billion, 1.3 in profit. You've got Comcast, you've got internet, some streaming services here. $30 billion in revenue for a net profit of $3.3 billion for Comcast. AT&T, $30 billion in revenue for a net profit of $4.5 billion. Their revenue's up 2% year over year. Verizon, $33.5 billion, net profit of $5 billion. T-Mobile, $20 billion for a net profit of $3 billion. And if you want to take a closer look at any of these, just hit pause. I'm going to keep scrolling through these. Visa, $10 billion, up 10% year over year for a net profit of $4.5 billion. So that's a very efficient business. Obviously, they don't have a lot of cost for their services. They just process transactions. Let's keep going here. American Express, $17 billion in revenue, $2.6 billion in net income. SAP, we've got IBM, ServiceNow. Let's keep going. Let's keep going. We got plenty of stocks to get to. JP Morgan Chase here, $45 billion. That's up 8% year over year for a net income of $15 billion. Bank of America, take a look at that. Wells Fargo, Morgan Stanley, Citigroup, all right, Schwab, looking good there. BlackRock, $5.5 billion in revenue. All right, PayPal, $7.8 billion in revenue for a net profit of 1.3. This is another one I would expect to get more net profit over time. Their transaction expense seems pretty high. Operating expenses seem high. SoFi just become profitable here over the last couple of years. $772 million in revenue. That's up 20% year over year for a net income of $71 million. This is a company that's young and is going to be spending a lot of money on sales and marketing. You can see there the SoFi Stadium, that's not cheap. Technology, things like that. They're trying to get as much market share and members, and you can see it's paying off. Here's SoFi's members chart. So they're doing the Uber playbook, spend a lot of money, get as many members as you can, and then get lean once you get the market share that you want. So you can see their different businesses. Lending is their big profit contributor. Tech platform and financial services. Financial services making a nice bump here the last few quarters. Robinhood, you can see about $1 billion in revenue for net income of $336 million. This is probably another one that's spending a lot of money to get market share. Etsy, not profitable. Coca-Cola, $11 billion in revenue, up 2% year over year for a net profit of $3.3 billion. PepsiCo, $18 billion in revenue, $1.8 in net profit. Tilray, this is a marijuana company, $190 million in revenue for an operating loss of $760 million. Holy cow. Chipotle, $3 billion in revenue for about $500 million in net profit. Yum Brands, Domino's, Moody's, Boeing. Boeing with a net loss of $31 million. Takes a lot of cost to build airplanes. Lockheed Martin operating a little bit better with an actual profit, $1.7 billion net profit. The airlines suck. All these airlines, you won't see a sliver of green. Delta, I think Delta is the best operated, most efficiently operated airline, and it's got 0.2 in net profit. A lot of red for Southwest, little green for United. UPS, barely profitable. United Healthcare, 6.5 billion in profit, 109 billion in revenue. AbbVie, Pfizer, 3 billion in profit. Merck, 5 billion in profit. Johnson and Johnson looks pretty solid here. That's looking pretty good. Procter and Gamble, Kraft Heinz, gonna keep scrolling through. Mondelez, all these very healthy food options. GE, Veranova, Adidas, barely profitable. Booking.com, net profit of 0.3 billion. Hilton, 0.3 billion. Circle, oh, that's interesting. Circle, I think this is the USDC company. They're looking to become IPO this year, I believe. All right, we talked about Microsoft. Let's take a look at Apple. So Apple this quarter, 95 billion in revenue, up 5% year over year for a net profit of $24.8 billion. So, a company like that's again, these big tech companies, they get more net profit than most companies get in revenue in a year. I mean, this right here is what Tesla gets in revenue a quarter. And they're getting that in profit just to buy back their stock or do whatever they want with. So again, these big tech companies are just head and shoulders over everybody. Eli Lilly, let's take a look. So they've got Mounjaro, a lot of medical device wow, look at that revenue up 45% year over year. And that's going to be a lot from Mounjaro, which is up 68% year over year. So that's a GLP-1 drug. And their net profit is 2.8 billion. Now these, pharmaceutical companies have a lot of operating expense for R&D, sales and marketing, things like that. So they have to spend typically a lot, and then when they get a drug that hits, it makes up for it. MasterCard net profit 3.3 billion. McDonald's here, revenue 6 billion, net profit $2 billion here. Qualcomm, we already looked at that. Booking, seen that. Starbucks, let's take a look. 9 billion in revenue, up 2% year over year for a net profit of 0.4 billion. So this is definitely one that store OpEx, I don't know what that is. I guess the cost for stores, but that seems pretty high. KLA, talked about that. Mondelez, talked about that. Airbnb, everyone knows Airbnb. This is another company. They spend a lot of money to just get as many members as they can. 2.5 billion in revenue for a slight net profit of 0.2 billion. Hilton, talked about it. GM, 44 billion in revenue. That's double Tesla's revenue. Net profit of $2.9 billion. So GM's looking okay. Roblox, this is another one, just getting as many users as they can. Roblox with $1 billion in revenue, up 30% year over year, operating loss of $255 million. Robinhood, talked about it. Yum Brands, talked about it. Block, I don't know what happened with Block. They get $5.5 billion in revenue, a slight net profit here. They lost $2.5 billion in Bitcoin. I don't quite understand this business. Kraft Heinz, talked about it. Live Nation, this is Ticketmaster, those types of companies. Revenue $3.5 billion, up 11% year over year for 50 million in net profit. Interesting. Reddit, I think Reddit had a good quarter. 392 million in revenue, up 61% year over year. So Reddit doing strong there. Grab, talked about it. Duolingo. All right. Twilio. Snapchat, talked about it. Align, Roku. All right, let's see here. We went over these guys already. Visa went over it. Coca-Cola went over it. Okay. So let's go ahead and look at a little bit of wrap up here for these companies here. We still have a lot of companies to report earnings, but the standout winner was definitely Microsoft, in my opinion. And the biggest disappointment was McDonald's. Their U.S. same-store sales fell 3%, the worst drop since 2020. So it'll be interesting to see how McDonald's does with all of the change in people's attitude when it comes to food. Hopefully that sticks. We see these health trends come and go, but hopefully people are looking out for their health, and the Ozempic kick and all that. We'll see if that really does eat into some of these unhealthy food companies. So far, notes I have: AI and cloud are driving the next wave of growth. The big tech companies are killing it. Azure reaccelerated growth of 35%. Amazon Web Service remains profitable, 39% margins, and Meta raised CapEx to expand AI capacity. All the companies, they did not, the big tech companies, they basically reiterated their CapEx spend, so they're going to keep spending on building out the cloud and AI. Let's see, tariffs are creating widespread uncertainty. Amazon, Apple, GM, Adidas all flag tariff as growing headwinds. They're already impacting cost structure, supply chains, and forward guidance. GM, UPS, Adidas raised guidance or pulled forecasts, or revised guidance or pulled forecasts entirely due to tariff risks. Consumer discretionary spending is cooling, so McDonald's, Starbucks, Chipotle saw weaker traffic in the U.S. Retailers, third-party sellers, Kraft Heinz reported soft volume trends as middle-income consumers pull back. Many companies are leaning into loyalty programs, value pricing, and marketing to combat the shift. Big tech dominant with resilience. So that's the theme here. iPhone held up despite China weakness. AWS, Azure, cloud leadership. These giants are gaining share in advertising, infrastructure, and subscription ecosystems while navigating regulatory and geopolitical pressures. So these guys are killing it. Smaller growth names are gaining momentum. So Roblox, Duolingo, Reddit, Twilio reported strong revenue growth, user metrics, and positive free cash flow trends. Also, I would put Spotify in there as well. They're not very small. Spotify is bigger than these names. And these are less insulated from tariffs or macro swings. Another company that was notable was Netflix. They were one of the first companies to return or to announce earnings, and they did really, really well. And that's another company that's, people. It's going to take a lot for people to cancel their Netflix subscription, and with their low-cost options with ads, maybe that will help people from canceling entirely. So there's a lot of companies that are doing real well. There's other companies that, a lot of digital companies are doing really well, but a lot of real world companies that, make airplanes or, move products across the globe, they're, make hamburgers, their margins are continuing to get squeezed and their consumers are getting hit a little bit. So that is really the update for now. We'll have more earnings to come, but I hope this helps. If you guys like it, hit the thumbs up and let me know what else you want to see. All right, longer video. I apologize. All right, peace out.